it's Tris. Welcome to my channel. This is my first ever YouTube video. Pretty excited. Today we're going to deep dive into the world of Forex. Got the chart of EUR USD up here. It's just going to be an educational video of a trade breakdown that I recently took last week, I think. So I'll just go through the context of trend, why I took this trade and how I took this trade, and what type of confirmation I used. It'll be a nice and short, sweet one. Let's get into it. Right, so I started on the daily time frame. As we know, we've had a beautiful push to the upside. Now we've come to mitigate some weekly targets onto the left here. So we had a nice push down. This push down, I've been targeting this in balance over here. We tapped it beautifully. As soon as we tapped into this, saw some beautiful rejections here, and then it's dropped down to the 4-hour time frame, and here we go. So let's just tidy this up. So we had this initial wick here. So if I just zoom in over here for you, so we initially tapped it here. Had a beautiful rejection, a very nice pin bar, or whatever candlestick you would like to call this. I like to call this SFP, swing failure pattern, for those who aren't familiar. It's a bullish candlestick for me. So I was looking to basically get long in this inside of this wick. I did take a -1, which I will go through in a minute. It fit my rules perfectly. It was a valid -1, so super happy with that. Let's get into it. Drop down to the 15-minute. Here we go. So just by looking at the 15-minute here, you can see the initial higher time frame rejection. So we have the impulse down, came back up and closed below, which was nice to see. So heavy volume here. My initial -1 was here, this trade here. As you can see, price came up and then eventually took me out over here, which is fine. That's a valid loss. Unfortunately, I was away from my PC and I missed this beautiful setup over here, but nothing we can do about that. We just got to move on. Let's get on to the initial trade breakdown. So my entry time frame was on the 1 minute, but let's just do a top-down analysis. My criteria is Wyckoff. If you're not familiar with it, I highly recommend you look into it, because there's a reason it's been around for 100 years. It's goated. But I like liquidations. So if we drop to the 5-minute, and what do we see here? So initially, my bias is bullish as soon as we tapped into the zone, and now we are in the second phase of confirmation. So we've had the initial high time frame rejection over here, and then we've now pushed down into mitigate this area. So my first loss was in this zone here, but we've broken down. Still valid for longs. So what do we see? We see an initial break of structure over here. Let's just get rid of this box for now. So we see an initial break of structure to the upside, or for those who would see this as a chalk, change of character, which is still fine. And then you can count this as your boss, your BOS, your break of structure. So now we've got 2 moves to the upside. So this is now definitely validation for the uptrend to continue for me. So what do I look for? I look for areas of inducement, areas of liquidity, areas that there might be resting stop losses, or so on and so forth. So for me, this would have been valid for sure. So you could have looked at this as your inducement, forgive me, like so. So liquidity, if it will load, like so. So you could have used this as your inducement and potentially entered off of here, but for me this didn't fit my rules, unfortunately, because of it just looked messy for me. So I just stayed out. I'd rather just be patient and wait for the setup to come to me, because patience is a big part of this game. So yeah, I looked at this entire zone here as inducement. Cool. So where do I choose my zones? So I like extreme zones, which is this zone here, which could be classed as the last up move, the last down move before the up move, which correlates to a unmitigated high time frame area of interest or order block. So if we jump to the 15-minute, you will see that this zone here, the last down move before the up move, correlates to the 15-minute order block, which is unmitigated. So as soon as price tapped into it the first time on the 15-minute, I saw a nice reaction from it, and then I was straight into my confirmation, which was on the 1 minute. Here we go. So here we have our initial 15-minute reaction, closed above, sorry, and then my entry was 170, just over here. So what do we see? I see Wyckoff. So it might look messy, but I can guarantee on the second time frames up here, Wyckoff is occurring. So the fact that price is doing this, approaching price like this into my zone, and then over here, what do we see? On the lower time frames, of course, this would be Wyckoff, but I see a liquidation. So the real term for this is SFP or SCOB, but it's basically just a liquidation of a low or a structural point. So SFP, swing failure pattern. So as soon as I noticed the liquidation of this low, I waited for the candle to close, which was a beautiful close, and then I waited for the next candle to print. But as soon as I saw the candle print, it pushed down immediately, but then it started rejecting. So it didn't form a new low basically. So once I saw that starting to reject from this previous low here, I understood that, okay, this low now is protected, right? So I market entered immediately as soon as I started seeing a reaction, ended up getting a really nice entry. Normally, because of spread, my entry would probably be up here somewhere at the 180 mark, but fortunately, I got a really nice entry on this. So yeah, I market entered, and then I waited for price to do its thing. So yeah, if we just see how price goes, so you can get a scope of how it was while I was watching it. Yeah, so my target is the pivot points, so the structural high. I could have zoomed out and ended up targeting a higher time frame structure, but we had heavy news. This was PMI, and then we also had the non-farm payrolls on this day. So hectic day. So if we just play price along, this was the PMI news, and this is another thing. News for me is just a catalyst. That's all it is. If price wants to deliver in a certain direction, that's what it will do. Even with news, I mean, sometimes we can wick below, but if you've got a liquidation occurrence before news, there's a good percentage that this low is probably protected. In this case it is. So if we just carry on playing price like so, so in most cases here we go, people would immediately move to break even. So how I used to trade, I would immediately move my stop loss to break even or take a break even partial, but I never moved my stop loss to break even because, as we will see in a minute, like so, like that. Price loves to come back, and I'm sure as a bunch of traders in this community know that how many times price moves in your directions, comes back, taps your BE, and then just goes right to the moon. It happens frequently, and it's very frustrating because you were right. So the way I've mitigated this is I have an edge. I let that edge play out. If I take a -1, I just add it to my journal, and I carry on trading as usual. If I take 10, 15 minus ones in a row, which is it's unlikely, but it's definitely possible, which is fine. It's my risk. My risk management allows me to cover all my losses in two, 3 trades, as you can see here. But yeah, so as part of my risk management, I don't move my stop loss to break even. I would just let the trade play out. So if we jump to the 5 minute and we just let price play out as it did, like so, and boom, we had a TP. So yeah, news was just shortly after this. I'll play it through. See non-farm payrolls coming up. So I could have held for sure. I could have just gotten greedy, but this is the whole point of having a systematic approach to the market. You have to know when to get in and when to get out, because this could have easily just tanked. But yeah, pretty confident in this trade. This was a really good setup. It's just how I see price. So as you can see here, it's Wyckoff. So we have a liquidation of a high, and well, we had a liquidation of a low and a high. So ideally, this is what you want to see. You want to see price do this, come up, like so, maybe come up and do this. All right. So this might look confusing to most, but really it's a liquidation of a high and a liquidation of a low, and then you can either say this is your inducement, like so, liquidity, and then you can say, oh my bad, then you can use this as an area of interest. So this is basically what we have here. So we have a liquidation of a high, but first we had a liquidation of a low, right? Like so. You could have gone from here, whichever, on the high time frame. This is just one candle, same for this. So, and then you have your inducement here. So this is just a quick easy markup of how I approach the market. This is just one variable of how I trade. There's obviously others like SCOB, and you scale into trades differently, but that's another video. But for now, this is how I approached this trade, which ended up being a really clean setup. I will post the proof of trade in the top left corner for you non-believers. But yeah, that's it for me. Cheers for listening to my first video. I'm going to try and upload once or twice a week, depending on how many trades I take during the week. But yeah, cheers guys, peace out.